Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 23rd, 2016. Again, stocks are hitting all-time highs and are trading near all-time highs. Technology, semiconductors, and telecom are leading the market higher. Junk bonds are also at all-time highs. This is very good for the stock market. The utilities and real estate, I think, are setting up for a bounce together with bonds. And we will look at some levels where I will be looking for a failure for this bounce, The dollar continues its breakout to multi-year highs, and of course this is way on gold, and we'll examine whether or not this upcoming bounce in gold will be the final of this bull market. Again, oil went nowhere this week, and natural gas is again gaining on the 52-week highs. Alright, so let's start off with S&P 500 on a daily time frame. This is a total return. In other words, the dividends are reinvested or added to the price. So we did hit all-time highs last week. This week we kind of came close. We did manage an all-time high close, I believe, or at least we came very close to it. So far what I see is possibly a trading range between this low from previous week and this high from previous week. So far we're kind of trading sideways. We could see a breakout out of this range to the upside. That's entirely possible. Alternative scenario, of course, is a breakdown of this range, in which case we could pull back. Well, it's anybody's guess. We could pull back, for example, to these levels here. Possibly lower to the 50-day moving average, possibly even lower, but I think that if the deeper we pull back, the more likely there will be a strong buying pressure that's going to come in. As far as the market breadth indicators, I don't see any major issues. I see that they're hitting all-time highs. There's unbalanced volume, advanced decline volume lines. I don't see any major divergences just yet. Here I wanted to point out just a simple MACD indicator, and yes, we did get a bearish cross on MACD indicator. Does it mean you should short at this time? I don't think so. I would never short this. Up here, these are all-time highs, and I would never short all-time highs. I'll never say never, but in this case I definitely would not want to do this. The reason for that is because MACD, it's just an indicator of moving averages, and the cross in and of itself doesn't mean anything. In fact, here is a cross right there from August of this year. So we had a cross, and then what happened? We made a higher high. So in a bullish security, I would completely ignore bearish indicators, and bearish crosses, and clearly S&P 500 is bullish. Here is another view of the same index, S&P 500 underlying index. Here I wanted to point out that we had an overbought condition in beginning of December here. We did relieve the overbought condition, so it's entirely possible we'll just continue higher. Now we're not as overbought as before, but again, I think that overbought in a bullish security is a good sign. In other words, there's a lot of pressure to push it there. As far as the long-term picture, I don't see any concerns at all. I think this is a very bullish chart. We have percentage of stocks above the 200-day moving average, exponential moving average, percentage of stocks and the bullish point and figure buy signals, bullish percent index, well in the bullish territory. We never even dipped below 50, well, maybe a little bit below 50, but generally speaking, I think this is still a long-term bullish chart. Here is the longer-term weekly time frame for S&P 500, all-time highs here. I thought that this was a support break back here, but we completely negated it. following the elections, and we have now all-time highs, and we're trading next to all-time highs. So this is very much a bullish sign. As far as the Dow Jones Industrial Average, this one actually hit all-time high on Tuesday. So this is and an all-time closing high as well. So Dow 20,000 before New Year's, possibly. Maybe we'll spike and then maybe we'll pull back. But in any case, this is a very strong move. You know, very good-looking move basically. My subscribers, again, we were buying before the elections because I thought this was a buying opportunity. Advanced decline line for the Dow, advanced decline volume for the Dow, all are hitting all-time highs. Even that on-balance volume is hitting all-time highs. So I see no divergences whatsoever. And additionally, we're not on that overbought. You can see that, for example, this indicator, intermediate term Breadth momentum oscillator, is kind of tapping out around whatever 1800 or so, 180, but here we were way above, around 300 almost. So we could still see an easy here around Brexit highs. We could still see a continuation higher for the general market, and Dow of course is a general market. As far as the higher beta universe, here is QQQ, NASDAQ 100. It's an all-time high right here on Monday of this, just of this week, and this speaks volumes. And again, I pointed out that around November elections, and then we had this big drop here, and last, someone of my subscribers was asking, should I be buying around here, and I absolutely said yes. It was a good buying opportunity basically, and now we have all-time highs. Even the QQQ also very good market breadth. Here is the advanced decline line, all-time highs, and advanced decline volume, also all-time highs right there. So as far as QQQ goes, I think we're in good shape. Here's the technology sector, also all-time highs and all-time closing highs just this week. So again, showing good appetite for risk. Look at this move, and even this around November, or rather November low is right there. You can barely see it now, and this is a weekly chart, so pretty strong move there. Another leader within the technology and the various market sectors is semiconductors. This one just had a tremendous run. Let's say from the November lows, or rather from January lows. Well, let's measure it from November, so that's about 11% or so. Very strong move as well. Now here's one that's kind of was a surprise to me. This is a telecommunications, telecoms. So usually these are lumped together with utilities because they have, well, they're a little bit more interest rate dependent, but also all-time highs. And this is November low right there. We just negated the support break and made all-time highs. So telecommunications are actually leading the market higher, and that's why I think that the next sector that will be catching up to all-time highs is probably utilities. This one has been severely underperforming, and I think it has to do, of course, with the sell-off in bonds. Interest rates are a little bit more important to utilities. But still, I think that this was a buying opportunity. So I myself own utilities, and hopefully my subscribers too. So utilities, I think, will be moving higher to basically catch up to the rest of the stock market. And here's real estate, same thing. It sold off quite hard following the sell-off in bonds this year, but I think that again it will be catching up to the rest of the market and possibly moving, and most likely will be moving higher. from here. So to summarize, S&P 500 and vast majority of stock funds are bullish, and I'll be very hesitant to short it up here. Rather, I would be looking to re-enter or enter on any sizable pullback. Moving on to the bond universe, here's junk bonds, symbol JNK. This is a total return, in other words, the dividends are added back into the price. And with dividends, on Friday, we just hit all-time highs for junk bonds. So to me, this is clearly a bullish chart. Additionally, this is a very good sign for the general stock market when the junk bonds are hitting new highs, and in this case all-time highs. So you can see that correlation between the junk bonds and the general stock market is quite high. In fact, I think of junk bonds as more of an extension of a stock market rather than the bond market. So here are the junk bonds on a weekly time frame. Very strong move, a very unusual move, by the way. This is a multi-year low, and we just turned around with a V-shaped recovery, made all-time highs. So you know, in general, I think this is a good sign, and you can see again correlation coefficient here spends most of its time in the positive territory. In other words, when stocks are moving higher, bonds are moving higher, and vice versa. As far as the investment grade bonds, it's a different story altogether, and TLT here, this is a 20+ year treasury bond fund, so up here are actually all-time highs. But then we sort of unraveled, had this big support break with a gap down, and just never looked back. So far there was there was I guess you can say 1, 2, 3 attempts to go higher. So far all 3 attempts did fail, but I think this 4th attempt is the charm, and I think we're seeing definitely a bottoming action here, and I think we will be rebounding as far as the TLT is concerned, and in general the investment grade bonds. As I said before, I think we are now in a bear market for TLTs. So if we do get a substantial rebound, I will be looking to short it. And of course, this is not a substantial rebound by any means. Here's TLT on the weekly time frame. You know, support break right here with an attempt to rally, failed, and just unraveled completely. And these are all-time highs, and now we're 52-week lows. So another unusual behavior there. But again, this is the first week you can see here we finally had a bullish, well, at least not a red candle. So that's certainly looking like, at the very least, there may be an attempt at a rebound. As far as where this rebound will take us, it's absolutely anybody's guess. Maybe it will bounce 1%, maybe it will bounce 20%. I don't think anybody really knows. But what I do know is if we do get a substantial rebound, I will be looking to short TLT. And of course, this is not a substantial rebound. There's a more general bond fund, the EGG. This has a lot of corporate bonds in it. Very similar pattern. You can see a support break and just continuation lower. A couple of, well, there's 1, 2, and this is a 3rd attempt to go higher. This one you can see is a lot sharper than on TLT. TLT is basically a flat consolidation. Here on EGG, it's like a sharp pullback, and this is almost a wedge. But you know, honestly, I think to me, this is not yet overbought enough. Well, since we're bearish, I'm bearish on this, and I don't feel like this is still quote-unquote overbought enough to be worthwhile to short. Here's AGG on their longer term on the weekly time frame. Here, up here, I was still thinking maybe this is a flag. You know, we had a breakout. Maybe this is a kind of like a sideways consolidation, and if we got a breakout about here, about like 111, 112, we could easily see fresh all-time highs. That clearly did not happen, and we just had a big weekly red candlestick, and then again continued lower. So basically we were retesting this breakout from February of this year. This was clearly a bullish and valid breakout, and looks like we unraveled, and now we're back to retesting this level. So maybe this is already a market maker maneuver. You can see that we dropped below support. If we said that this was support, after the breakout, so 107, 107, we draw a line, we break below support. What happens here? Everybody who was, let's say, long, let go and sold their shares, and then the market maker came in, bought the shares, and now will attempt to move the prices higher. We will see if that's indeed the effect, but it's entirely possible that this is already a market maker maneuver. Break below support, and then they start buying and push the prices higher. As far as the municipal bonds, I think the rebound, this is a weekly chart, by the way, municipal bonds. I pointed out this enormous volume here several weeks ago. You can see my videos. I think this was already like a bottom in action. Look at this enormous volume still here, the past 3 weeks. And, if somebody is buying down here, and this is a very large volume, so somebody must be buying, and most likely it's the market makers, of course, and large hedge funds who are sensing that the bottom is most likely in, at the very least temporarily, because this is a very strong move. You can see that this is let me just check how big of a move this is. This is a 7% move, and for municipal bonds this is a lot. So most likely, at least for the time being, the bottom has been put in for the bonds, at least for municipal bonds. We'll see about the investment grade ones. All right, moving on to the Forex universe. This is US dollar on a daily time frame. Well, we had breakout back here in October, throwback, rejection of lower prices, continuation higher, another little throwback to exactly the breakout level, to this top here, continuation higher. Now we are at multi-year highs, so this I think are 14 plus year highs. So it's a strong move for a currency, and let's just say that we measure it from November lows. This is about an 8% move for a currency. This is a strong move. So I would not be surprised if we see at the very least consolidation sideways and possibly a pullback, well, at least to 101.97, but more likely like around here to like 100 level. In fact, here is a weekly time frame for US dollar, same chart, just in a longer term time frame. Here's that November low that I just showed, we just broke out above the previous resistance here. If you watched some of my previous videos, I was pretty consistent about this, and these tops here were basically a line in the sand, and if we break out above them, we could see a substantial move higher. It's possible that we're basically doing just that. So looks like we broke out. We had a throwback here in December, beginning of December, so it's possible we're gonna continue maybe a little bit higher, but most likely we will need to see another throwback and consolidate above this 100.71 area. So euro is at 52-week lows, and then we'll look at a little more detail in the next chart for euro. Here's my euro, and it did hit multi-year lows here on just Wednesday, actually. So if you listen to my videos again, I was pretty consistent that this longer-term euro was a bearish chart. So it looks like we are getting there. a little bit overextended to the downside. These were also, I believe, 52-week lows here, if I'm not mistaken. So I said that we need to pull back. We did pull back. We got strong rejection here at the 50-day and previous highs, previous lows here, and then just moved back into the bearish phase. Here's euro on the weekly time frame. Again, if you listen to my videos, I was pretty consistent. Just imagine for a second that this is a, let's say, a 5-minute or a 1-minute chart, and we have a big drop, a rebound, and then another rebound. So this is a bearish chart. You can see that we were rejected in this area here on 2 occasions. And now we're at multi-year lows here. So euro, let me just do a quick measure here. So let's say we broke below this low, and it looks like we did close below this low on a weekly basis. This Friday is 104.3, this is 104.56, the low here, so we did close below those levels here. So a conservative estimate could be possibly something like this, around an 8% move. So we could still see another at least 8% move down. I don't know exactly how it will unfold. It's possible that we'll just rebound, strong rebound, another rejection, and then another leg down. But I think that it appears that this breakdown is now valid, and we could see a strong move down of, well, at least 8%. Could be higher. Here's British pound. Back here I said it was significantly oversold and we need a rebound. We did get a rebound, and we basically failed at previous broken support, just even below it. You know, not even. I thought we were gonna get a little bit further upside, but we didn't. Looks like we already failed, and we continue on lower. So if you were able to short up here, let's say we're shorting, so that's about, you know, about 3% move. That's not bad. We still could kind of bounce, you know, around here. I was actually thinking that we could get as high as 200-day moving average to like about here, 1.3445, but I guess it's not happening. So maybe we're already heading lower. Here's the weekly chart of that same chart, and I thought we were gonna get higher to like maybe like here, 1.34, but I guess we didn't, and looks like we're already heading lower. So these are 30 plus year lows. As far as the Japanese yen, you know, we basically turned around. On a daily time frame, it's not as obvious, but on a weekly time frame, it's pretty obvious that we are now in a bull market for US dollar versus Japanese yen. Pointed out, so you know, there's lots of bottoming actions, lots of rejection candles. You know, this long tails out of the bottom here, and then we just skyrocketed out of here. So as far as the daily time frame, yeah, you know, I thought that we were gonna finally have a little bit of correction here. Then I thought we were gonna have a correction here, and then I thought we were gonna have a correction here. So I don't know where we're gonna get a correction, but we certainly are overdue for one. So maybe we'll pull back to the 50-day moving average to like 111, 110. So like 111, 110. But I think if you're a currency trader, I think it would be a great buying opportunity, basically. All right, let's move on to gold. All right, gold. This is a daily time frame. So these are 52-week highs up here in July of this year. Well, we had multiple broken supports. We had one broken support here in October. Here's another broken support here in November. Yet another broken support here in late November. And now we are, well, these are not 52-week lows just yet. So I have my own market breadth index. Let me show it to you on a different chart. Here it is on the, actually here it is on the longer term time frame. This is GDX, but market breadth index for gold. And the same thing as market breadth index for stocks. It attempts to see whether or not a security is in a bull or a bear market. So for example, here gold and gold miners entered a bearish period here in 2012, somewhere around April, May. So all of these rebounds where it says breakout, 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 I would have been shorting them because I knew from this chart that these are counter trend rallies and they should be shorted. Here it's different. Now I see that there is a breakout and it seems to be a true breakout. Now we're seeing a very deep pullback in gold, but still I think that the market breadth index for gold is still in a bullish territory. We have not yet crossed below this red line. It's very close. In fact, the more we stay, the more gold stays down, the more it moves sideways or down without any significant attempt at a move higher, the more likely that this market breadth index for gold, GBI, will flip bearish. And in that case, what will happen is I will be looking to short. Right now, I'm still looking to go long gold and gold miners, but we did have significant downside pressure. As far as the weekly time frame for gold, so these are multi-year lows here. We broke, well, these are major supports here at 12, especially at 1200. We had a major support break, and possibly we're going to continue lower. However, again, I think that there is still a slim possibility that we will stop and turn around. I think, again, it will depend on the dollar, and if the dollar decides to take a breather and maybe even move down a little bit, then gold will certainly, well, it should take advantage of that opportunity. Here is GDX, the gold market, gold miners ETF. Very strong move down. These are 52-week highs. Again, I kept pointing out, for example, here's one really useful indicator, and this is a gold miners bullish percent index, and you can actually use it. It's free. It comes with MasterChartsTrading.com, BPGDM. Up here, back here in July of this year, it hit 100. That means that it cannot go any higher. And I said it was extremely overbought. I would avoid buying up here. We did get a little bit of a higher high, but then we sort of unraveled. Now, same as gold, if we don't get a rally here, and I mean really soon, then the gold breadth index that I just showed will eventually turn bearish. And in that case, if we do get a rally, I'm going to be looking to short it. On this chart, we see several market breadth indicators. For example, here's advanced decline and advanced decline volume lines. And this one, and they're both confirming the lower lows here. So there is no bullish divergence, unfortunately. However, again, we're very oversold. And this is a gold miners bullish percent index. Again, we're already oversold here at around October, but now we're even deeper oversold. Only 10% of the gold miners are on a point and figure buy signal. So basically anything, basically gold and gold miners need to hold here, and if we get any more downside, even a few percentage points down, I think this indicator will flip bearish. So for now, I'm still thinking maybe we'll be able to bounce higher, but it is more and more looking that less and less likely the more it stays down here. And moving on to the hard commodities, so this is oil and a weekly time frame. As you can see, we did gain a little bit, basically 0.13% for the week, so this is more or less, we went nowhere. Maybe we'll move to as high as like 62 here, but if you Google Baker Hughes rig count, you can already hear that American producers are adding more oil rigs, and what in response to higher oil prices, because of course United States producers are not going to be cutting production as some of the OPEC counterparts. So I don't see high potential on the upside for oil. I do see plenty of downside potential, but right now it looks like this upswing that started around beginning of November has not yet run its course. So I would probably just stay out of this market altogether. Here's natural gas on a daily time frame. If you listen to my videos, I have been pretty bullish on natural gas after this breakout here in the beginning of June. Had some pretty wild action here, but you can see that we did not break below this $2.50 or so area. And now we hit 52-week highs just a couple of weeks ago, and we're again approaching 52-week highs just this Friday. Here is a weekly time frame for the same commodity, natural gas. You can see a very strong move from October and November lows and 52-week highs here, and we also filled the gap here from 2014. So I think overall natural gas is bullish, and we could still see further price appreciation. Pretty strong resistance probably here at $4.75, but I don't see much resistance before that, so we could see still potential up move from here. Alright, that's it for this week's recap. If you like what you're hearing, please consider signing up at MasterChartsTrading.com, and please stay tuned on how to find us on the internet and what kind of services do I offer. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.